Hello students, how are you all? I hope you are doing well. In this video, I am going to explain CA Foundation Accounting Mock Test Paper Series 1. Is it clear students? Yes. So I hope you have seen all this MTP. So here I will try to quickly complete the video by explaining important aspects or important concepts. Okay, now look at first one. As usual, we know we get 6 true or false statements. Now first one is a claim that an enterprise is pursuing through legal process where the outcome is uncertain is a contingent liability. See here the organization is pursuing a claim. So it becomes contingent asset for organization. So here the statement is false. Next one. The effect of errors committed cancelled out. The errors will be called compensating errors and the trial balance will disagree. See, yeah, if the effect of errors committed cancelled out, they are called compensating errors, but the trial balance will agree. But here they have given disagree, so it is false. Yes or no, students? So here we have answers also. You can next one. Stock at the end appears in the trial balance is taken only to the balance sheet. See, if the closing stock appears outside the trial balance, that means in the adjustment, it is taken to trading account credit side at the same time balance sheet asset side, but here they said stock already appearing in the trial balance, so it is directly taken to the balance sheet asset side, so the given statement is true. Next one, reissue of forfeited shares is allotment of shares but not a sale. This false now, because reissue of shares is not allotment of fresh shares, it is simply a sale of old shares. Is it clear students? Next one, both revenue and capital nature transaction. Both revenue and capital nature transactions are recorded in the receipts and payments account. Yes, it is true. In the income and expenditure account, we record only revenue items. But in the receipts and payments account, we record revenue and capital items. So the given statement is true. Observe carefully. Fifth one, na? So it is true. Observe carefully. Next one. Since a company has existence independent of its members, it continues to be in existence despite the death, insolvency, or change of members. Yes, it is true. Because company has corporate legal entity now, separate from its members. So members' death, insolvency, it will not affect the company existence. So the given statement is true, student. So these are true or false statements. Next one. Here they have given one theory question. You can read simply money measurement concept and matching concept. You can go through it quickly. Next one, 1C. Here we have a question from valuation of inventory, the two inventory valuation technique. So LIFO weighted average. Here they have given weighted average method. Under weighted average method, what we do, whenever we issue inventory, we take issue price is equal to total cost divided by total units. Like this, we take issue price. Yes or no, students? Yes. Now look at first one. The following are the details of the spare parts of a chemical mill. Here, chronological order, try to observe. 1/1/2024, opening inventory nil. Next, purchases. 100 units, 300 per unit. You get 100 units purchase, 330,000. Balance is 100 units, 300 unit, 300 per unit, 30,000 rupees. Next one, 15/1/2024, issued for consumption 50 units. Out of 100, we issued 50. Here we take issue price directly 300 rupees because we don't have further issue price now. So 15/1 should balance. Is it clear, students? Next one. 1/2/2024 purchases 200 units, 400 per unit. So this is receipts now. 200 for 200 units to 400 price, total 80,000. So here be careful when you are writing balance amount. So earlier we have 50 units. Now we purchased 200, total 250 units. Earlier amount 15,000, now 80,000, total 95,000. Write down like this. Next, a minute. Look at 95,000 total divided by how many units? 250 units, 380 rupees price. This is weighted average price. This is weighted average price. Okay, next one. 15 to 2024. 15 to 2024 issued for consumption. Again 100 units. This time we take price 380 rupees per unit. Yes or no? Previous price. Observe 100 units, 380 rupees price, 38,000. Balance earlier 250, now 100 issued now 150. Amount there is no change. So 380 per unit, 50. Price per unit there is no change. Next one, 20th 2. Issued for consumption again 100 units. Here also we consider same price 380. Is it clear, students? So 100 units, so 380, 38,000. Balance units left 50. 380, 19,000. But at the time of writing balance, be careful. So finally, how much is our closing stock? 50 units of rupees 380 each, total 19,000 rupees. This is our closing stock. Clear, students? Next one. Come to second question. Second question is on rectification of errors. And when you are solving a problem from rectification of errors, be careful. Identify whether it is stage 2 or stage 3. Stage 1 is not stage 1, stage 2, stage 3. Stage 1 is nothing but what? Before preparation of trial balance. Yes or no? So here before preparation of trial balance, generally we don't use any suspense account. Stage 2 is nothing but what? After preparation of trial balance, but before preparation of financial statements. Stage 3 is nothing but what? After preparation of financial statements. Is it clear, students? Yes. Generally in the problems, the examination we get either stage 2 or stage 3. Identify that in the problem first. Look at before preparation of the trial balance, the following errors were found in the books of Saraswati and Sons before preparation of trial balance. Before preparation of trial balance. Give the necessary entries to correct them. So before preparation of trial balance means it is stage 1, student. Is stage 1. Observe carefully. Is it clear? So in stage 1, we don't use any suspense account. Do remember. So here, if it is one-sided error, then we simply rectify that account. If it is two-sided error, then we try to write the rectification entry. Here, students, so do remember, here we don't use any suspense account. Why? Why? Because it is stage 1 error, means before preparation of trial balance. Now look at one by one. Furniture purchased for office use amounting to 20,000 has been entered in the purchase day book. So by mistake we purchased furniture na, it is entered in the purchase day book. Earlier furniture account is not debited, now you debit furniture account, and purchase account is debited, now you credit. Entry furniture account debit to purchases account 20,000 rupees. So is it clear, students? Next one. An amount of 3,000 due from Satyam, which had been written off as bad debts in the previous year. Okay. Recovered in the current year and had been posted to the personal account of Satyam. What is the entry for bad debts recovered? Bank cash or bank account debit to bad debts recovered account. But here they recorded the entry cash or bank account debit to Satyam account. By mistake, Satyam account is credited na. Now you simply debit. So Satyam account debit to for the entry we record bad debts recovered account. Yes or no, students? Earlier bad debts recovered account is not credited na. Now we credit. Earlier Satyam account is credited. Now we debit. Is it clear? Next one. Minor repairs made to the building. Minor repairs made to the building. Which account we debit generally? Repairs to building account or repairs account simply. 18,500 were debited to building account. By mistake they debited to building account. Now debit repairs account, credit building account. So repairs account debit to building account. Next one. Fourth one. Goods purchased from Ram Singh amounting to 18,000 have remained unrecorded so far. It is complete omission. Na? So now we record the entry. What is the entry we record? Purchases account debit to Ram Singh account 18,000. Observe. Next one. College fees of proprietor's son. College fees of proprietor's son. Generally we debit a drawings account. 15,000 debited to audit fees account. Now what we do? Simply we debit drawings account and credit audit fees account. Look at, students. Is it clear? Next one. Receipt of 4,500 from Kanika credited to Anita account. Generally, what is the entry for this? Cash or bank account debit to Kanika account. So it should be credited. But by mistake credited to Anita account. Now how do we rectify this? Anita account debit to Kanika account. Anita account debit to Kanika account. How much? 4,500. Observe. Next one. Goods amounting to 8,900 had been returned by customer. What is the entry we record generally? Sales returns account debit to customer account and were taken into inventory, but no entry was made in the books. Now we record sales returns or returns inward account debit to customer or debtor account. Next one. 7,500 paid for wages. 7,500 paid for wages to workmen for making office furniture. Generally, what is the entry we record for this? Office furniture account debit to cash or bank. But what happened here? Had been charged to wages account. Now what we do? Debit office furniture account to wages account. Simple. Next one. Salary paid to clerk 18,000 has been debited to his personal account. Normally, what is the entry we record? Salary account debit to cash or bank account. But here by mistake debited to personal account of clerk. Now, what is the rectification? Salary account debit to clerk account credit. Is it clear, students? Next one. A purchase of goods from Raghav amounting to 20,000 has been wrongly entered through the sales book. Means, what is the earlier entry recorded? Raghav account debit. So, we recorded in the sales book means Raghav account debit to sales account. Actually, what is the correct entry? Purchase account debit to Raghav account. Now rectify this. Earlier purchase account is not debited, now debit. Sales account credited, now debit. Raghav account credit. Is it clear, students? Observe carefully. So Raghav account is credited with double amount. Don't forget to write this. This is rectification of error problem. Next one. Yes, Chand and Sons. This is depreciation problem, student. If you observe, in the depreciation, they have asked prepare machinery account, machinery disposal account, and provision for depreciation account. So be careful here. So when we are maintaining machinery disposal account, cost of asset we have to transfer to machinery account, and whatever the depreciation we maintained till now on the asset sold, that is also transferred to the machinery account, the disposal account. There we find out the profit or loss on sale of machinery. Is it clear, students? Yes. So now look at it. Yes, Chand and associates purchased a machine for 3 lakhs. On which date? 1/1/2021. So what is the entry we record? Machinery account debit to bank account. So post into machinery account debit to bank 3 lakhs. So whenever you are solving problems on depreciation, first identify year wise. So here the year is 2021, 2021, next 2022, 2023, like this. So they are following, you read the problem total, they are following calendar year. Yes or no, students? Yes. So during this particular year, which transactions happened, identify. Purchase of asset, sale of asset, or provided depreciation, or anything. So identify what transactions happened during 2021. Is it clear, students? Another machine costing 4,50,000 was purchased on 1/7/2022. 1/7/2022 means next year, na? So now for the year 2021, there are no transactions now except purchase of asset. So for purchase of asset, we recorded the entry machinery account debit to bank. Now provide depreciation. For providing depreciation, normally what is the entry we record? Depreciation account debit to machinery account. But here they are maintaining provision for depreciation account. So what is the entry we record? Depreciation account debit to provision for depreciation account. So provision for depreciation account is credited. So by depreciation 45. So here when you are solving problems from depreciation, when given data contains more than one asset, it is better to maintain some working note like this. So carefully, working note like this. Here I have prepared, look at working note. Calculation of simple. First, we talk about machine 1 is purchased on 1/1/2000. Here, what is the cost of asset? 3 lakhs. What is the method of depreciation they are providing? 15% on written down value. So WDV method. 3 lakhs into 15%. 3 lakhs into 15%, 45,000. Write down 45,000 here. So 2021 completed, balance. Balance the account. So here balance 3 lakhs. Here opening balance 3 lakhs. Now we are in which year? 2022. Try to observe what happened in the year 2022. Okay. The same time provision for depreciation also balance 45,000. The same 45,000 balance. So when you are writing years, na, be careful. When you are writing years, be careful. Next look at 2022. What happened? On 1/7/2022, we have purchased another machine. Entry bank account, sorry, machinery account debit to bank account. The account debit to bank account 4.5 lakh. In our working note, we add one more machine. This is purchased on 1/7/2000. What's the cost here? 4.5 lakh. Now check what happened during 2022 now. On 31/12/2023, they are giving next information on 2023. Now 2022, there are no more transactions. So calculate depreciation. This time we should calculate depreciation on two assets. Get first one. On this 2,55,000 to 15%, right away we get 38,250. On this 4,50,000 into percent into, this is purchased on which date? 1/7. So here we calculate depreciation. How much you get? So 4.5 lakh into 15%, you get 33,750. So what is the total depreciation for 2022? This is it clear, students? So write down the entry. What is the entry here? We record depreciation account debit to provision for depreciation account. So go to provision for depreciation account. By depreciation 72, 38,250, 150. If you want, you can write here. For this year, this account is balanced. So balance C by D, balance B by D. Machinery account also balanced. By balance C by D, balance. Now we are in 2023. Observe 2023. What happened? Next date they are giving 31/12/2023, means 2023 completely completed. Means we have to provide a depreciation on these two assets. First, calculate depreciation for 2023. This is the depreciation for 2020. Here, students. Now, what is the entry? Depreciation account debit to provision for depreciation account. Look at provision for depreciation account. 32,512 on the asset sold and 32,438 on the remaining asset. Is it clear, students? Now, on this date, what happened? We sold the asset. We sold the asset. Here, whenever you sold the asset, first transfer cost of asset to machinery disposal account. For that, what is the entry we record? Machinery disposal account debit to machinery account. So machinery account credit side by machinery disposal. Relax. Machinery disposal account debit side to machinery account. Second. Cost of asset transfer. Now transfer depreciation on the asset sold from provision for depreciation account to machinery disposal account. For that, what is the entry we record? Provision for depreciation account debit to machinery disposal account. So here calculate what is the total depreciation on the asset sold. Calculate what is the total depreciation on the asset sold. Observe 45,000 plus 38,250 plus 32,512. This is the total depreciation on the asset sold, that is transferred to machinery disposal account. Entry provision for depreciation account debit to machinery disposal account. Total depreciation is 1,15,000. Same is transferred to disposal account. Is it clear, students? Next look at the machine purchased on 1/1/2021 was sold for 1,50,000. Sold the machine for 1,50,000. Entry bank account debit to machinery disposal account. Posting by bank. Now calculate profit or loss on sale of asset. Here itself you can calculate. Okay. Now the book value of asset as on the date of sale is 1,84,238. Sale proceeds are 150. Loss 34,230. This loss we transfer to P&L account. So by profit and loss account. Is it clear? So with this machinery disposal account is completed. Now look at balance provision for depreciation account. Balance is 36,118. Now this balance of 36,118 consists of machinery to na. This consists of machinery to depreciation. Now balance machinery account also. Machinery, now this machinery account contains second machinery information. Machinery account contains second machinery information. Machinery account, disposal provision for depreciation account, and machinery disposal. Is it clear, students? Third question. 3A consists of dissolution of partnership. This dissolution of partnership. So carefully. In dissolution of partnership, we have two types of problems. One is normal dissolution. So preparation of realization account, partners capital accounts, and bank account. Another type of problem is piecemeal distribution. Another type of problem is piecemeal distribution. So identify whether it is normal dissolution problem or piecemeal distribution. Dear students, now look at P, Q, R, and S had been carrying on business in partnership, sharing profits and losses in the ratio of 4:3 to 1. They decided to dissolve the partnership on the basis of following balance sheet as on 30th April. Now, it is normal dissolution. Na? Observe carefully. Okay. Now look at applying the principles laid down in Garner versus Murray. Prepare the realization account, partners capital account, and cash account. This type of problem na is, but when it comes to piecemeal distribution, you have to apply some little bit of common sense and little bit of but their drafting statement is very important. Now look at simple problem. So we have a process. First, they have asked to prepare realization account, draw realization account format. Next, partners capital accounts format and cash account format. After drawing formats, now look at what is the first step, student? Transfer assets to realization account. First step in dissolution, transfer assets to realization account. What is the entry for that? Realization account to debit to assets account. Transfer one by one asset. Land and building transferred. Furniture transfer. Stock transfer. Debtors transfer. Cash in hand. Open cash account and write down opening balance. To balance brought down. Capital overdrawn. Prepare partners capital accounts. These two partners capital accounts are showing debit balance. Now, to balance brought down. Observe. Yes, realization account debit and partners capital account debit balances. Or next one. Now come to liabilities side. Now come to liabilities side. Here capital accounts are showing P and Q credit balance. Na? So show credit balance 216, 144 over. Next one, liabilities. Sundry creditor outside liability, mortgage loan outside liability, transfer to realization account. Entry. Sundry creditors account debit, mortgage loan account debit to realization account. So realization account credit side. Realization account credit side by sundry creditors mortgage. Next step. With this all balance sheet is completed. Next, realization were the assets were realized as under. So here check whether all assets are realized or not. Here we have four assets: land and building, furniture, stock, debtors. Check whether all assets are realized or not. If any particular asset information is not given, so what is your assumption whether it is realized or not? If it is tangible asset, assume it is realized at book value. If it is intangible asset, assume that intangible asset does not realize anything. Is it clear, students? This assumption. But here they are giving land and building, furniture, fixtures, stock, debtors. So all assets are realized. So calculate total amount of realization. 2 lakh 30 plus 42,000 plus 72,000 plus 65,000. Total 4 lakh 9,000 rupees realized. Entry for this: bank account debit to cash or bank account to debit to realization account. So go to cash account, write down to realization. All assets they have written. Go to realization account credit side. Realization credit side, buy cash. You can write total amount or you can write separate amount. Next one. Expenses of dissolution amounted to 7,800. What is the entry? Realization account debit to cash account. So realization account debit to cash. 7,800. Immediately credit side realization. Next one. Further creditors of 18,000 had to be met. 18,000. This 18,000 rupees is nothing but unrecorded liability. Already we have to pay to the creditors 36,000. Now total amount payable to creditors 36,000 plus 18,000. And they are not giving any information about mortgage loan. So what is your assumption whether it is paid or not paid? So regarding any liability, if it is not given anything whether it is paid or not paid, we assume that this liability has been paid. Total 36 plus 18, 54,000 plus mortgage loan 1,10,000 paid. Entry. Realization account debit to cash or bank account. Go to realization account. Realization account debit to cash. Creditors important, to cash. Mortgage loan important. Now go to cash account credit side. Creditors mortgage. Next is R became insolvent and nothing was realized from his private estate. See here R became insolvent. In case of insolvency, here Garner versus Murray rule is applicable. So here you have to remember the provisions. What are the provisions? The loss due to insolvency of partner is capital loss. This is shared between partners, solvent partners in their capital ratio. And if any partner, just before dissolution, any partner capital account is showing debit balance, then we should not ask him to bear the loss of insolvent partner. Get here, R became insolvent now. Yes, capital account is showing which balance? Debit balance. Now we should not ask S to bear loss of R. And one more important point, in case of realization loss, suppose after all adjustments of realization, if we get realization loss, all solvent partners should bring the realization loss in cash to make their capitals good. Yes or no, students? These are the provisions of Garner versus Murray. Now, before solving fourth point, now first balance realization account. First balance realization account. Identify whether it is profit or loss. So here total is 6,55,300. There is a loss of 1,03,000. And this loss we distribute to all partners in 4:3:1 ratio. What is the entry for this? Realization account debit to, sorry, partners capital account debit to realization account. So realization account credit side, partners capital account debit side. Observe. Now all the solvent partners should bring this realization loss in cash. R became insolvent except or remaining people will bring this realization loss in cash. For that, what is the entry we record? Cash or bank account debit to partners capital account. Here partners capital account credit. So here some students they get confusion. This cash they bring because to follow Garner versus Murray rule. But in actual practice they will not bring, but only for on record we are showing it. Cash account debit. Is it clear, students? Next step. This realization account is closed. Now come to partners capital accounts. Who became insolvent? R. First balance R account. Balance R account. R account to debit side 21,000. Credit side nothing. So here total loss is how much? 21,000 is the capital loss. This is borne by solvent partners, their capital ratio. Here there are three partners P, Q, S. Already S account is showing debit balance. Now we should not ask to bear capital loss. Now who will bear P and Q? In which ratio? Capital ratio. Capital ratio. Here they are following fluctuating capitals. If it is fixed capital, whatever the capital accounts we have in the fixed capital accounts that we take. But it is if they are following fluctuating capital. Na? In case of fluctuating capital, we have to make some adjustments for all after doing all adjustments, whatever the capital accounts they are showing, that balance we take. But before distribution of realization profit or loss, all adjustments we do except realization profit or loss adjustment. Here there are no adjustments like interest on capital, interest on drawings, and general reserve distribution or workman compensation fund distribution. All these things. Next, observe. Now this loss they will bear in 216 is to 144. 216 is to 144. Then how much you get the amounts? Observe carefully. 21,000 into 265 36. Oh, okay. 21,016. 2160 into how much? 12,636 and 842. What is the entry for this? P capital account debit, Q capital account debit to R capital. This entry we post. With this, R capital account is completed. Now next, balance all partners capital accounts. P capital account, Q capital account, S capital account. Here if you observe S capital is showing debit balance of 16,030 rupees. 16,030, credit 10,030. So he should bring 6,000. Entry. Cash or bank account debit to S capital posting. Now P capital and Q capital showing credit balances. These two balances must be equal to cash account balance. That means your problem is correct. Finally, the balances of capital accounts must be equal to balance of cash account. Then your problem correct. Here correct. This is our dissolution. If you get this type of problem now, then it becomes easy. Yes or no, students? But mainly focus on dissolution of partnership. The two these aspects: realization account, partners capital accounts, cash account. At the same time, focus on bill distribution also. Is it clear, students? That's it. Next one. Yeah. Mr. Dilip furnishes the following trial balance and some other information. It is final accounts problem now. Observe. Capital, balance sheet, liabilities side, purchases, trading account debit, sales, trading account credit, opening inventory, trading account debit, freight inward, trading account debit, salaries, P&L account debit, administration expenses, P&L account debit. Next, furniture, balance sheet asset, trade receivable, trade payable, balance sheet asset, balance sheet liabilities. Returns. So debit returns means sales returns. Deduct from sales returns 36,000. Purchase returns. Returns credit with purchase returns. Deduct from purchases. Discount allowed debit 57. P&L account debit. Discount received credit. P&L account credit. Bad debts. Check whether any provision for doubtful debts maintaining or not maintaining. If any provision for doubtful debts are maintaining, then simply transfer these bad debts to provision account. Otherwise, transfer to P&L account. Yeah, that's it. That means we are not maintaining any provision account. So simply transfer these bad debts to P&L account. Next, investments in government securities. Balance sheet asset, cash in hand, cash at bank. Balance sheet asset. In this problem, the important adjustments are GST adjustment, students. GST adjustment. Mainly focus on GST adjustment. Here we have input GST at the same time output GST. So set of provisions you should understand. Look at additional information they have given. Closing stock, trading account credit, balance sheet asset, furniture is depreciated, P&L account debit, balance sheet deduct depreciation, prepare a trading account, profit and loss account and balance sheet. This is another simple problem, students, but important is adjustment of GST. First look at CGST. After that, SGST. After that, IGST. So whatever the input GST we have, that is set off against output GST. Suppose if you have CGST input, first set off against CGST output. Then whatever the balance left, set off against IGST. Next, we have input SGST. Input SGST. That is set off against output SGST. Still you have some balance that can be adjusted against IGST. Next, IGST balance is there. First, set off against output IGST. Remaining can be adjusted against CGST. Yes or no, students? These are GST provisions. Observe. In this problem, GST provisions alone important. Remaining everything you can solve. So directly I am going to set off provision. Observe. Here, look at. First, this is tax payable output. How we are adjusting. Input, how much we have? 30,000 CGST, 30,000 IGST. First, this 30,000 is adjusted against CGST. Still, how much balance you have? 6,000 rupees balance you have. That is adjusted against IGST. Next, SGST output balance, how much you have? 30,000. That is first adjusted against SGST. Still, how much balance you have? 6,000. That is adjusted against SGST. So finally, this 24,000 gone. Next, out of 18,000, we have adjusted 12,000. Na? Remaining 6,000 rupees shown on the liability side of balance sheet. Here, what is our assumption? Output IGST is still payable. If you assume that output IGST is paid, then there is no liability of 6,000 rupees output IGST. At the same time, bank balance will reduce by 6,000 rupees. Bank balance will reduce by 6,000 rupees. Then what is your bank balance? 5,61,000 is your bank balance. Then when you assume that output IGST is, otherwise liability 6,000, cash balance no reduction. This is our problem, students. Next one, fourth problem. Fourth problem is given on 4A NPO problem, student. Observe. New state society showed the following position on 31st March 2023. Balance sheet. Here try to understand the dates. Mark the dates first. 31st March 2013. This is balance sheet, students. Next, the receipts and payments account for the year ended 31st March 2024. Balance sheet they are giving 31st March 2023, but whereas receipts and payments account they are giving 31st March 2024. Means this balance sheet is opening balance sheet and this is during the year receipts and payments account. Is it clear? Next one. Now look at what they are asking finally. You are required to prepare income and expenditure account for the year ended 31st March 2024 after making the following adjustment. See, here only the requirement is income and expenditure account. First, draw the format. Books of so and so club, books of new state society, income and expenditure account for the year ended 31st March 2024. Is it clear, students? Yes. Now, here only the requirement is only income and expenditure account. What is the nature of income and expenditure account? Tell me. Income and expenditure account is prepared based on accrual concept. Based on accrual concept means all expenses we show in the income and expenditure account relating to current year only. What is our current year? 23-24. And expenses paid, payable. At the same time, incomes received, receivable. Any other expense or income we ignore from this income and expenditure account. Is it clear, students? Yes. Here first read one by one item in the balance sheet. Capital fund, expenses payable. So in the beginning of the year we have expenses now. These generally we pay during the year. So look at, to remember. Next, electrical fittings asset, furniture asset, books asset, investment asset, cash at bank, cash in hand asset. Now observe they are also giving receipts and payments account. Whatever the balances we have at the beginning of the year in the bank and cash, they become opening balances now. Check whether they have opening balances or not. Yes, they have opening balances. Is it clear, students? Now observe one by one item. First observe payment side. First observe payment side, students. Look at payments side. Observe payments side. We can make two types of payments. One is revenue payments, revenue expenses. Other one is capital payments or capital expenses. All revenue expenses are taken to income and expenditure account directly. Yes or no, students? All capital expenditures are shown the balance sheet. Is it clear? Now look at electric charges. So income and expenditure account debit side. income and expenditure account debit side. If there is no adjustment now, show this amount directly. Next one, postage and telegram. Look at the adjustments. Adjustment is for what? Membership subscription, outstanding rent, outstanding salaries, books depreciation. Next, electrical fittings and furniture depreciation. 60% of the entrance fees is to be capitalized. Interest on securities is to be calculated 15% per annum, including purchases made on 1/10/2023. So almost except outstanding rent and salaries, only outstanding for expenses. Remaining all are relating to income and depreciation. Okay, fine. Now look at. So that for postage and stationery, there is no adjustment. So show it directly. Next one. Telephone charges, no adjustment, show it directly. Next one. Books purchased, this is asset, paid. Outstanding expenses paid, 14,000. Observe any adjustment for outstanding expenses? Yeah. See, these 14,000 rupees, if you observe, previous year closing balance now, outstanding amount payable. So previous year expense we have paid in the current year, 14,000 match. So this we will not show in the income and expenditure account. Don't show it by mistake. Why? Because these are the expenses outstanding in the previous year. So ignore this. 14,000, ignore. Next, rent. This is the total rent paid during the year, 1,76,000. For this we have some adjustment. Outstanding rent still 8,000 rupees. So 176, right? 176 plus 8. Total 184. 6,000, 8,000 rupees outstanding. This we show on the liability side of balance sheet. Here you need not to prepare any balance sheet. Next one. This is very, very logical, students. Next, investment in securities. This is added to the investments already have. Next, salaries. This is nothing but salaries paid, 1,32,000. Still outstanding how much? 6,000. Total salaries 1,38,000. Do remember. So 1,32 plus 6, 1,38. 6,000 rupees shown on the liability side of balance sheet. Next one. Balance. These are the closing balances of bank and cash shown on the asset side of balance sheet. Clear? So with this, all liability side completed. Okay, except two things we need to understand. One, mark investment in securities, at the same time books purchase. These two information important at the time of calculation of depreciation. Is it clear, students? Okay. Now, by the way, calculate depreciation also over. So electrical fittings on books how much? 10% per annum. Okay, additions how much? 1/4/2023. So look at the depreciation calculation. Books total 9,20,000 books. Opening balance, books opening balance 8 lakhs. During the year purchased 1,20,000, total 9,20,000. On 9,20,000, 10% 92,000. Next one, investments purchased now. Okay. Next, electrical fittings and furniture. Okay, now look at electrical fittings 30,000, furniture 10,000. Total depreciation write down in the income and expenditure account debit side. Next one. Now, opening investments how much? 3 lakhs. During their purchased how much? 80,000. So on 3 lakhs, we get interest. Here what is the interest rate given? 15%. On 3 lakhs we get 15% interest for full year. On 80,000 we get interest for, these are purchased on 1/10/2023 na. So for how many months we get? 6 months. So look at interest calculation. 15% on 3 lakhs, 45,000, 15% on 80,000 for 6 months. So 6,000. Observe. 80,000 into 15% into 12. So 6,000 rupees. Is it clear, students? So if you want, you can write it here. 80,000 to 15% into 6 for your understanding. The total interest receivable 51,000. But observe in the problem how much interest received. Interest received on securities 16,000. So still receivable 35,000. So in the income and expenditure account credit side, total we show 51,000 as interest. 51,000 as interest. Observe. Here students, over. Next one, look at receipts. Entrance fee 60,000. They said 60% of the entrance fee is capitalized. Means 40% of the entrance fees is shown as revenue income. Observe entrance fees. 40%. 24,000. Next. Membership subscription 4 lakh. Observe previous year balance sheet. Is there any outstanding subscription in the previous year? No. That means we received subscriptions in the current year 4 lakhs. And they said membership subscription included 20,000 received in advance. So out of 4 lakhs, deduct 20,000 the balance sheet in the income and expenditure account. 4 lakhs minus 20,000, 3 lakh 80. 20,000 again we show on the liability side of balance sheet as advance. Next one. Sale proceeds of old paper credit 3,000. Next one. Hire of lecture hall credit over. All incomes are taken to one expenditure. That's it. Simple problem. Okay. Next. Yeah. This problem is on death of a partner, students. Death of a partner. Observe carefully. So at the time of death of a partner, what is the care you have to take regarding joint life policy? At the same time, share of profit calculation. Regarding joint life policy and share of profit till the date of death. This much of care you have to take. The following is the balance sheet of Messrs. Krishna Brothers as at 31st March 2024. They share profit and losses equally. What is the profit sharing ratio? Equally. Observe Amit, Lalit, Sumit, three partners. General reserve. So what we do here? So we open partners capital accounts. Here what is the requirement? Journal entry for goodwill adjustment. Okay, fine. Revaluation account, capital accounts of partners and balance sheet after death of Sumit. So first open, record, draw journal format for goodwill entry and prepare revaluation account and capital accounts and balance sheet. So once you are ready with the formats, then we start our problem. Is it clear, students? Yes. Now look at. First we have capital accounts now. So show it them in the partners capital accounts. Trade balance 24,600, 24,600, 27. Next one. General reserve. Whether they specify or not, distribute this to the partners. 3,000, 9,000. Entry. General reserve account debit to partners capital account. 9,000 equal 3,000, 3,000, 3,000. General reserve. Next one. Trade payables. If there is no change in the trade payables, take this trade payables as it is to the balance sheet liabilities side. Trade payables. Is it clear, students? Next one. So with this liability side is completed. Now come to asset side. Machinery, furniture, fixtures, cash, inventories. Open cash account. Open cash account, or if there is no payment to the deceased partner, you need not to open any cash account. Now, machinery, go to the balance sheet, write down same things, machinery, furniture, fixtures, inventories. Look at machinery, furniture, fixtures, inventories. Write down as it is. Take the existing balances 30,000, 15,800, 12,600, 5,700. These are the existing balances. Now we see the adjustment. If any particular asset is increased, then we add. If any particular asset is reduced, then we deduct it. And the remaining amount we show in the balance sheet. And whether it is increased or decreased, that we show in the revaluation account. Logic. Now look at. Assets are to be revalued. Machinery 35,100 means 5,100 increase. So total 5,100. Go to revaluation account credit side, write down 5,100. Next, furniture 13,800. Earlier 12,000, sorry, 16,800, but now it is reduced to 13,800. So in the revaluation account, how much decrease? 3,000. Balance sheet, new value 13,800. Next one, fixers 12,600, but here Regarding fixers, there is no adjustment, so write down as it is fixers 12,600. Next one, inventories. Inventories earlier 5,700, new value is 4,500, means decrease. So 4,500 balance sheet decrease now. How much decrease? 1,200 revaluation account. With these all assets revalued, all liabilities reassessed. Now observe carefully. Over. A adjustment completed. So once revaluation of assets is completed, then you can simply calculate directly profit or loss. So calculate here profit or loss. Here it is a profit of 900 rupees. This profit distribute to partners. Entry. Revaluation account debit to partners capital account. Partners capital account credit side 300 300. Understood, students? With this revaluation account is completed. Now look at one by one adjustment, important adjustment. Here you have trade receivables. Regarding trade receivables, there is no adjustment. Now write down as it is. Write down as it is. Clear? Next. Now important adjustment. Goodwill was valued at 18,000 and was to be credited with his share without using a goodwill account. Anyway, in case of admission, retirement or death, we don't use any goodwill account. Instead of that, we adjust this adjustment through partners capital accounts. Yes or no? So what is the goodwill? Total goodwill is 18,000. What is the share of goodwill of deceased partner? Who died? Sumit. Equally na. So out of 18,000, Sumit will get 1 by 3. That means 6,000 rupees. 6,000 rupees. This is borne by, or this is compensated by remaining two partners, Amit and Lalit, in their gaining ratio. So to calculate gaining ratio, what is the formula? New ratio minus old ratio. Here what is the new ratio? Equally. So automatically the gaining ratio is also equal, so that Amit and Lalit will bear this 6,000, 3,000 and 3,000. Entry. Amit capital account debit, Lalit capital account debit to Sumit capital account. Observe. Amit and Lalit capital account debit to Sumit capital account 3,000 3,000. Now by Amit and Lalit capital account 3,300 3,000. Goodwill adjusted. Next one. 6,000 is to be paid to the executors of the dead partner on 5th April. Okay. After death of Sumit, Amit. Okay, simple. Here you need not to do any share of profit adjustment because there is no instruction. Simple. We are safe side. Next, now who died? Sumit. Balance the Sumit account quickly. 36,300. What is the balance here? 36,300. Debit said nothing. So they said immediately pay 6,000 rupees to Sumit. Immediately pay 6,000 rupees to Sumit, and remaining amount they said transfer to the executors of deceased partner loan. Okay, look at 1,000 rupees we are paying and we are transferring the remaining balance to executor. Okay, fine. Now look at. After that, balance Amit capital and Lalit capital. Here we have capitals 24,900, 24,900. Show them in the balance sheet liability side. Don't forget to show executors account in the balance sheet. Okay. Lalit capital, Amit capital at the same time with executors account. That's it, student. This is very simple problem, student. This is goodwill adjustment. Very simple problem. You get this type of problem in the exam now, you can score full marks. You can score full marks, students. Full marks. They have given here for 12 marks, for easily 12 out of 12. And what about goodwill adjustment entry? Already we have recorded now. Amit capital account debit, Lalit capital account debit to Sumit capital account. This is a goodwill adjustment entry. Next problem. Yeah, 4A. This is bills of exchange, students. Bills of exchange. Okay. Ali draws a bill for 45,000 on Akbar on 15th April 2024 for 3 months. For 3 months. Which is returned by Akbar to Ali after accepting the same. Fine. Ali gets it discounted with the bank for 44,100 on 18th April and remits 1/3 amount to Akbar. It is nothing but accommodation bill. Yes. In case of accommodation bill, what happens? Generally, we draw two bills. Generally, first bill is drawn, amount is shared. To honor that bill, we draw another bill. Automatically, the first person who has drawn the bill, he become insolvent. Happen na normally. This is a requirement first. Pass necessary journal entries for the above transactions in the books of Ali. Pass necessary journal entries for the above transactions in the books of Ali. Only Ali books. Okay. For the first transaction, for the first line, what is the entry? Bills receivable account debit to Akbar account. Bills receivable account debit to Akbar account 45,000. Now this bill is discounted. Entry. Bank account debit, discount account debit to bills receivable account. So here they have given the amount, you need not to calculate any discount. Sometimes you should calculate the discount. So 44,100, discount is 900. Clear? Now out of that, how much amount is sent to Akbar? One third. So amount sent one third, at the same time discount also he has to bear one third. Entry. Akbar account debit 45,000 into one third, 15,000. Discount 900 into one third, 300. Remaining amount cash paid. Now look at next. On the due date, Ali fails to remit the amount. How much amount Ali has to remit? 20,000. Sorry, 30,000 rupees. Ali has to remit 30,000, and Akbar will add more 15,000 rupees. They have to honor the first bill. Here they failed to honor the first bill. That's why what Ali is doing, Akbar, but he accepts bill for 52,500. Now this time Akbar is drawing a bill on Ali. So we accepted a bill na entry. Akbar account debit to bills payable account 52,500. Clear? Next one. Now what Akbar will do? Akbar will discount the bill to the bank. After discounting the bill, Akbar will honor the first bill. You need not to write any entries in the books of Ali. But here, what is happening for 3 months, which Akbar discounts for 51,300 and remits 8,745 to Ali. So here we are receiving 8,475. Case of accommodation bill now. Biggest problem for the student is calculation of discount for the second bill. Calculation of the discount should be owned by Ali for the second bill. That's the problem. Simple. Here, like this, you people try to draw a flow chart. What is the bill amount? 52,500. Divide this into two parts. Cash received. Cash received how much? Just a minute. 51,300. 1,300. Automatically discount how much? 1,200. Now this discount is borne by Ali and Akbar. How they will bear this discount, how they will share this discount means how this amount is utilized by them. How this amount is utilized by them. So out of 51,300, how much amount utilized by Ali and how much amount utilized by Akbar? Calculate. Here look at Ali. So out of the first bill, Ali has to bring 20,000 rupees. Ali has to send 20,000 but did not send. Okay, that's why out of the second bill, first he utilizes 20,000, because out of the second bill, out of the proceeds of second bill, he honored the first bill. Next one, how much amount remitted? 8,475. So less 8,475. First bill amount to 20. Now out of the second bill proceeds, we are sending 8,475. Means he utilizes 28,475 rupees. So for 51,300, what is the discount? 1,200. For 28,475, what is the discount? Proportionate. Calculate. 28,475 into 1,200 divided by 51,000. We get 660. So carefully. Sir, no, that's it. Just a minute. Okay. Here a small 30,000 na. So first bill 30,000 na. So 38,475 into 1,200 divided by 51,300. So 900 rupees. Here Ali should bear 900 rupees discount. So finally look at what is the entry: bank account debit, discount account debit, and Akbar account. That's it. After that, what happened? After that, what happened? We don't know whether the bill is honored or whether the bill is dishonored or whether Ali became insolvent. If he became insolvent, what is the amount paid? We don't know all these things. Just they have given till here so that we have written entries also. It's very, very simple problems. Is it clear? That's it. Next, look at 5B. Varun does not maintain proper books of accounts, means accounts from incomplete records. However, he maintains a record of his bank transactions and also is unable to give following information from which you are requested to prepare trading and profit and loss account. I tell you something. So recently, December 24, CMA inter exams completed. In that, Group 1 Financial Accounting Paper 6, they have given same problem in December 2024. It is lengthy. They have given more information, but here they have cut the information. If you want, you can check December 26 question. Yes, sir. December 24, paper 6 question paper financial accounting. Same question. There is no change in the amounts. Same amounts. Same. Here. Okay. Now look at. So, but here they are asking only trading account and profit and loss account. Okay. Fine. Trading account, profit and loss account, draw the format first. Trading account, profit and loss account, draw the format first. Okay, I have drawn trading and profit and loss account. First information, look at 1/1/2024 opening, 31/12/2024 closing. Stock 50 opening, closing 62,500. What we do? Simply we go to trading account, debit side. Opening stock 50,000, closing stock 62,500. One. Fixed assets. Opening 7,500, closing 9,000. No need to prepare any balance sheet, so that ignore this information at present. But it is better to prepare fixed assets account. Opening balance 7,500, closing balance 9,000. Dear students, next information. Details of his bank transactions were as follows. Sale of fixed assets 1750. We sold asset na, entry bank account debit to asset account 1750. So what is the cost of asset? 2,500. Means 2,500 worth of asset we sold for 1,750. Remaining 750 is loss. 750 loss. Transfer to P&L account debit. Simple. Transfer to P&L account debit. Next one. Expenses paid 49,250. Entry. Expenses account debit to bank. So expenses P&L account debit side 49,250. This is simple problem, student. Purchase of fixed asset 5,000. So credit side 5,000. Sorry, debit side 5,000. Is it clear? Now balance fixed assets account. Balance 7,500 plus 5,000. 12,500. 12,500 minus 1,750 minus 750 minus 9,000. Difference we have 1,000 rupees. What may be this 1,000 rupees? This may be depreciation on fixed assets. So depreciation on fixed asset is transferred to P&L account debit. Is it clear? Next one. That's it. No cash transactions took place during the year. There are no transactions. Goods are sold at a cost 25%. So cost plus 25%. So cost of goods sold is 2,60,000. So here you can calculate directly sales now. COGS 2,60,000. Add profit. How much? 25%. So 2,60,000 into 25%. 65,000. Then total sales 3,25,000. Is it clear? So how we utilize this information? Observe carefully. 3,25,000 trading account credit side. 3,25,000 trading account credit side. 65,000 rupees gross profit is there. That is trading account debit side. Now if you observe trading account, we have opening stock, sales, closing stock, gross profit. Now the missing figure is purchases. Now the missing figure is purchases. So the balancing figure is nothing but purchases. Clear? Now this gross profit is taken to the P&L account credit. Now balance here. The net profit is 14,000. To get fixed assets account. Is it clear, students? Very simple problem. Okay. Next one. 5C. Following is the extract of the balance sheet of Substance Limited as at 31st March 2024. Okay. Authorized capital 45,000, 12% preference shares. Okay. 4,50,000 equity shares of 10 each. Okay. This is authorized. Next. Issued and subscribed 36,000, 12% preference shares of 10 each fully paid. 4,05,000 equity shares of 10 each 8 rupees and partly paid, means partly paid. Reserves and surplus, we have general reserve, capital reserve, profit realized on sale of plant. Okay. Securities premium, profit and loss account. Fine. On 1st April 2024, the company has made final call at 2 each on 4,05,000 equity shares. First write down the entry for this. Entry. Equity share final call account debit 4,05,000 shares into 2 rupees to equity share capital account. Without second thought, first write down the entry for this. Equity share final call account debit to equity share capital account. Next one. The call money was received by 20th April. What is the entry for that? Bank account debit to equity share final call account. Over. Next one. Thereafter, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. To issue bonus shares, first of all, check whether existing shares are fully paid up or not. Yes. And do remember, bonus is given only to equity shareholders, not to preference shareholders. First, here there are steps for bonus issue. First, bonus ratio. What is the bonus ratio? 1 share for every 4 shares held. 1 share for every 4 shares held. Second, calculate number of bonus shares to be issued. Number of bonus shares to be issued. Existing shares 4,05,000 into 1 by 4. Sorry, 1 by 4. How many shares? 4,05,000 into 1 by 4. 1 lakh 1,250 shares. Next, calculate amount of bonus share into 10 rupees each share. Na? So, total we need 10 lakh 12,500. This much of amount we need, student. Observe. This much of amount we need. Get the calculation. They did not give any calculation, but how many bonus shares we have to issue? Follow these steps. Simple. First, calculate bonus ratio. Second, calculate number of bonus shares to be issued. After that, multiply number of bonus shares issued with the face value. You get 10 lakh 12,500. This much of bonus shares we have to issue. For this, what are the sources here? We have sequence of sources. Now, first one CRR. Next one securities premium. Next one capital reserve if realized in cash. Next one general reserve. Next one profit and loss account balance. Here we don't have any CRR, but here we have securities premium 1,12,500. At the same time general reserve, sorry, capital reserve, and after that we use general reserve. If amount is not sufficient, we use profit and loss account. So the entry here, securities premium 112,500, capital reserve 1,80,000, general reserve 5,40,000. Still we need balance of 1,80,000 that we have taken from profit and loss to bonus to shareholders. Simple. Now issue bonus shares. Entry bonus to shareholders account debit to equity share capital account. Bonus to shareholders account debit to equity share capital account. The simple problem on bonus issue. Only bonus issue. There is no other right issue, redemption of preference shares, nothing. Company decided to use capital reserve for bonus issue as it has been realized in cash. Anyway, we use it. So necessary journal entries in the books of the company and prepare the extract of balance sheet as on 30th April 2024 after bonus issue. Already we have recorded entries. Now look at the balance sheet. Simple. Whatever the balance sheet they have given in the problem, you continue that balance sheet. Wherever the amounts and numbers changed, you also try to change. That's it. Look at authorized share capital 45,000. Earlier, whatever we have, the same. Earlier, what are the equity shares? Authorized equity shares 4 lakh 50. But now 4 lakh 5,000 plus 1 lakh 1,250. Total 5 lakh 1,250. Here we have to increase the authorized share capital. That is very important. So authorized share capital 5 lakh 6,250 over. Now issued. There is no change in the preference share capital. Yes. There is a change in the equity share capital. Earlier partly paid up. Now fully paid up plus bonus issue. Total 5 lakh 6,250 into 10 rupees. Now reserves. All reserves are closed because we have utilized securities premium, capital reserve, general reserve. These three accounts are closed. Next account P&L. P&L account, earlier how much balance we have? 9 lakhs. We have utilized 5 lakh 80,000. Na? Sorry, 1 lakh 80,000. Remaining 7 lakh 20,000. That's it. This is extract of balance sheet. Dear students, next one. Now sixth problem, 6A and 6B. Observe. X Limited issued 2 lakh equity shares of 10 each at a premium of 10% payable 2 on application, 4 on allotment, including premium, 2 on first call, and balance on the final call. Issue of shares problem. Okay. All the shares were fully subscribed. In case of full subscription, there is no problem. Problem will be very smooth. Mr. P, who held, first of all, write down the entry for application money because it is fully subscribed. Entry bank account debit to equity share application account. 2 lakhs into 2, 4 lakhs. So, bank account debit to equity share application 4 lakhs. Immediately transfer application because it is fully subscription. Now, it is full subscription. So that transfer total money to capital. So, equity share application account debit to equity share capital account. Now, immediately call for allotment amount. Entry equity share allotment account debit to equity share capital account. How much? 2 lakh shares into 4 rupees, and this amount includes premium of rupees 10% means 1 rupee. What's the entry we record? Equity share allotment account debit 4 rupees to equity share capital 3 rupees to securities premium 1 rupee. Multiply with 2 lakhs. That's it. Now, if you receive the total amount of allotment, entry bank account debit to equity share allotment. If any amount is not received, then the amount not received is transferred to simply calls in arrears. Yes or no, students? Check whether allotment amount received or not received. Mr. P, who held 20,000 shares, paid full remaining amount on its final first call itself. This is calls in advance. The final call was made after 4 months from the first call. Here we have to pay interest on calls in advance. Okay, so on calls in advance, we pay interest at 12%. On calls in arrears, we charge interest at 10%. Don't forget. Fully paid, except a shareholder having 2,000 shares and one another shareholder having 1,000 shares. This is calls in arrears. They paid their due amount after 3 months. So we should charge interest on calls in arrears, students. Don't forget. And 4 months respectively, along with interest on calls in arrears. Company also paid interest on calls in advance. Here they did not mention calls interest on calls in arrears, rate of interest on calls in arrears. At the same time, rate of interest on calls in advance. So here you have to take them from Companies Act provisions. To Mr. P. The company maintains calls in arrears and calls in advance account. Means whenever we receive advance amount, that is transferred to calls in advance account. Whenever amount is not received from shareholders, that amount we transfer to calls in arrears account. Give journal entries to record these transactions. Show workings of interest calculation. Very simple problem, students. Why it is simple? There is no for feature. There is no for feature. Why? Because all amounts are received. Na? When there is no for feature, there is no concept of reissue or no. Get one by one entry. So that means allotment amount total received, bank account debit to equity share allotment account. Now final call. Entry equity share final call account debit to equity share capital account. 2 lakh shares into, sorry, first call 2 lakh shares into, what is the amount due on first call? 2 rupees. Final call 2 rupees. Yes or no? Total 11 na? 10 plus 1 11 rupee. How we are receiving this 11 rupee? 2 application, 4 allotment, 2 first call. Means 8. So 3 final call. Final call amount 3. Right. So 2 lakhs into 2 rupees, 4 lakhs. At the time of first call, we received amount on 20,000 shares in advance. So that amount we transfer to calls in advance. So 20,000 shares into final call amount 3 rupees. So 60,000 rupees we transfer to calls in advance. This is important in this problem. Remaining our 4 lakhs anyway we received. Now, entry for final call due. Equity share final call account debit to equity share capital. 2 lakh shares into 3 rupees, 6 lakhs. Out of 6 lakhs, we already received 60,000. Now we should receive 5,40,000 rupees. Check whether you received this 5,40,000 rupees or not. They said, what they said, on 2,000 shares amount not received, on 1,000 shares also amount not received. That means on 3,000 shares amount not received. 3,000 shares into 3 rupees, 9,000 rupees. That means we have not received 9,000 rupees. This 9,000 rupees we transfer to calls in arrears. So 5,31,000 rupees we receive cash. Now, earlier whatever the advance amount we have, that advance amount we adjust against final call. Finally, what is the entry? Bank account debit 531, calls in advance 60, calls in arrears 9,000 to equity share capital. Sorry, equity share final call. That's it. Now they said we received this arrears amount with interest. With interest. Here calculation of interest is very important. First, calculate interest on advance amount. Advance amount. Calculate interest on advance amount. You get everybody? Yes. So, final call which was made after 4 months from the first call. But we received amount 4 months before now. So, total 60,000 into 4 by 12 into 12 by 100. Entry for interest. This interest is expense for us because we are paying na debit. So interest on calls in advance account debit to shareholders account. Rate 12%. So if you want, you can write 60,000 into 12 by 100 into 4 by 12. You get 2,400. Pay this interest. Interest on, sorry, shareholders account debit to bank 1,400. Next one, charge interest on arrears. That means calls in arrears. Observe, one person he paid amount when 4 months from the first call. They paid their due amount 3 months and 4 months respectively. So on 2,000 shares we received amount after 3 months. On 1,000 shares we received amount after 4 months. So calculate separately. First one, shareholder account debit. Sorry, shareholder account debit to interest on calls in arrears. Interest on calls in arrears is income for us, credit. You can write down calculation. 2,000 shares into 3 rupees per share means total 6,000 into 10% to 3 by 12. How much? 150. Calculate 1,000 into 10% into 3 by 12. 150 rupees. Now we receive 6,000 rupees arrears plus interest 6,150. So bank account debit, calls in arrears, shareholders. Next 1,000 shares. On 1,000 shares we have to treat separately. So on 1,000 shares, what is the rate of interest? 10% only. So 1,000 shares, 1,000 shares 3 rupees 3,000 into 6 4 by 12 because we received after 4 months to 10%. How much? 100. Calculate 3,000 into 10% into 4 by 12. So 100 rupees. Now we receive 3,000 rupees along with interest 3,100. So bank account debit 3,100 to calls in arrears to shareholder. Is it clear, students? So this is simple problem, but number of entries are more. The whole focus is on interest calculation. Interest on calls in advance, interest on calls in arrears. This is problem number A. Now look at 6b. 6b, they are giving option. They are giving one problem. At the same time, they are asking to write one question. It is your choice. Explain in brief objective and advantages of setting accounting standards. Or else they are asking prepare a bank reconciliation statement. So most of the students, they choose bank reconciliation statement. Observe. Bank balance as per passbook. Favorable balance. So put the heading bank reconciliation statement on 31st March 2024. Start with passbook balance. Balance as per passbook. Bracket lo credit side. In the bracket, credit 75 lakhs. So this is our problem format. Look at, that's it. Now look at one by one item, whether it is added to passbook balance to get cash book balance. Okay, look at bills discounted, dishonored, not recorded in the cash book. So passbook balance increases now. Sorry, passbook balance decreases, cash book balance increases. So that this is added. Next, look at 37 lakh 50,000. Next one, check received entered twice in the cash book. We received check that is entered into the cash book twice. Means cash book balance increases, whereas passbook decrease. So increase one time. Bank charges entered twice in the cash book. This is cash book error na. What we do? Simply, bank charges entered twice means bank balance decreases. Because our target is what? Cash book. Insurance premium paid directly by bank under standing instruction. Automatically our bank balance decreases. It is not recorded in the cash book na. So cash book balance in. Simple, students. Next one. Checks issued but not presented to bank for payment. We have issued checks. As per our cash book, balance decreases, whereas they are not presented into bank. Passbook balance increase, but we need which balance? Minus. Checks received but not sent to bank. We received checks but not sent to bank. Means in our cash book, balance increases, whereas passbook balance decreases. Checks deposited in bank but no entry passed in the cash book. We deposited checks into bank, so bank balance increases, but for this there is no entry in the cash book. Cash book balance decreases. Next, credit side of bank column. Bank column means cash book. Cast short. Credit side of the bank column cast short means payments are showing less. When payments are showing less, automatically cash book balance increases. So cash book balance increases. Now to this 75 lakhs, you just assign these symbols. Okay. So 75,000, 3750. Next 75,000. Next 4 lakh 50,000. Next 84 lakhs. Next 1000. That's it. How much? 1 crore 26 lakh 90,000. Total 2 crore 1 lakh 9. Next, deduct 15,000, 3750, 750. How much? 7515. So finally, favorable balance as per cash book. That's it, friends. So this is our MTP. This is our MTP for January 2025. MTP January 2025. Is it clear, students? So we meet again in the next MTP. We have already got series 2, MTP series 2 also. So I will try to upload soon. Is it clear, students? Yes. Don't forget to subscribe this channel, and if you like this video, try to share to your friends also. For more updates, click on bell icon. That's it, students. We meet again in the next video. Till then, bye bye everyone.